Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The mixed price action for the Australian dollar saw eventually a weaker play and now tumbles back towards the 60-day simple moving average at 62.6065, which currently remains intact and presently providing near-term support as the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded to 103.94 at the close of New York this morning. The latest US Core Consumer Price Index, the CPI, came in lower than expected this week at 2.8% year on year, beating the 2.9 forecasts and down from the 3% previously, with a 0.2% drop month on month in the headline inflation, according to the US Bureau of Labor Statistics. On Thursday, the Producer Price Index, the PPI, tracking what producers receive for their goods and services, showed no increase for the month following January's revised 0.6% gain. The expected increase was 0.3%, but the actual figure came in at 0.00%. While these cooler than expected readings suggest that the Fed's inflation efforts are working, they may also start raising concerns again about slowing economic activity. So as I mentioned, the 60-day moving average is holding. The technicals are a little bit mixed, but as long as that level is intact, I am viewing for a bounce back towards the region of 63.1060 area to 64 cents. The euro dollar lost recent gains on Thursday and is likely to see a little bit more to that in the short term as profit taking increases. The market has broken the trend support here and little to find now on the downside in terms of support around 107.60. I like the way this market is a little bit to the bearish side as profit taking is warranted due to the heavy rally or demand that we've recently seen. Once the pullback's been seen, which is short term as I mentioned, could see a bounce back to 109 to 110. Turning to dollar yen, well, the market's a little bit on the wavery side and is attempting to once again stage another upside move as the previous one quickly fizzled out and fell rather sharply. In light of how the technical set up, any movement beyond 148.55.65 should give opportunity for the bears to return and weigh on the market as the broader call with the downtrend still weighs towards 144 as initial target. The British pound remains in positive territory above 129, which is where the inverse head and shoulders gave me a projection, which was reached. I still hold a short-term bias and still waiting opportunity, just in case this bearish divergence may snap and see a pullback towards 128. Spot gold, well, the market was cheering and it still is cheering as we now approach the $3,000 mark. We got to a high today of 2,990 and it's still powering on as safe haven demand is still the main key here. Not overly bought, but the trend is stronger, so I still feel that we may overshoot the 3,000 mark and probably look towards 3,011 to around 3,030. But nevertheless, this close to Marubozu candle is strong and demand is still evident in the market, so any pullback likely to be shallow and seen today with support around 2,980. Wrapping up with oil, well, there is a key level that spans back to 5 years, and this level is around $64.55 a barrel. Looking at the market here, as long as we hold above this key level here, then the market finding support. On the weeklies, we are extremely oversold, and last time we were down here, did see a good bounce back towards to $77 to $78 a barrel. I like the way this is shaping out as a weekly, and if it turns into, which I feel could be, that is a dragonfly doji on a weekly bias, then further demand should be seen, and I do like the way the structure of the MACD and RSI is shaping up. So I am turning a little bit more to the bullish side, and let's see if the rally can continue. A break above 67.20 should ignite the move. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.